We have our panelists, Mr. Rajat Sharma, Corporate Vice President, eBioTech Corporation, Mr. Sarabjit Singh, Chief Executive Officer, Policybazaar, Mr. Sachin Goyal, Chief Technology Officer and Head of Digital, Tata AIA Life Insurance. And to moderate our session, we have with us Mr. Joydeep Roy, Global Leader, Insurance Digital Assets and Leader Insurance Practice, India, PwC. Over to you, Mr. Roy.
Thank you, Shreya. Good afternoon to everybody, to all my co-panelists, as well as to the audience. I'm sure you're having a very exciting day. It's a fantastic topic. The whole Global FinTech Fest is a wonderful initiative. Nothing is more interesting to everybody now than what opportunities lie on the other end of the peak that we are seeing now. Well, in no discussion in these times can escape the extraordinary situation that we find ourselves in. And while COVID-19 has created a large havoc all over the world, it has definitely given rise to two really massive opportunities. One lies in the field of environmental cleansing and environmental regeneration, while the other definitely is the acceleration of everything that is digital, that is online, that is technology, and led by technology. The whole market, especially the financial services industry. So while we can mope around what is wrong, and since it's the 97th birth anniversary of the great singer Mukesh, who did sing Jaane Kahan Gaye Wo Din, and we can keep on saying that. But I think we should take inspiration from his other song, which is Chal Akela, Chal Akela, Chal Akela, and that's how we have to move it forward. So we, instead of being cowed down by disruption, the topic is so very aptly named as moving ahead with technology disruption in the insurance industry. So welcome to everybody. I hope we're going to provide you with thoughts, really food for thought, something which will be provocative. I have a fantastic array of panelists, as you're going to see in a moment. So to start it off, I'm going to ask Rajat Sharma from eBioTech to come and to actually present to us. And he has got a point of view of how one can move ahead with tech disruption and not get cowed down. Over to you, Rajat. Let's start the proceedings with you.
Thank you so much, Joydeep. And I guess we'll not have to Akela Chal today. We have a good panel. So let's all kind of enjoy this session today. So thanks. My name is Rajat and I'm the Corporate VP Global Head of Sales at eBioTech. People who don't know eBioTech, we are in the business of making insurance easy and connected. Second part of my session, I'll be talking of InsurMo and how we are making this connected and how this hyper-connected world of insurance is getting powered by us through InsurMo. But I have a couple of minutes and let me set a stage of the discussion for today, which is disruption. And when we talk of disruption in tech, the first thing that comes to my mind is connectivity. We are living in a hyper-connected environment today, right? So every industry is going through that massive disruption of hyper-connectivity. Insurance obviously is no different, right? And in fact, I believe that insurance is far more under pressure than any other industry to be connected because insurance has to be embedded into other industries rather than working with the other industries, right? And that is where, insurance around 2 years, 3 years, or 4 years back, where you used to work with the banks or agents or at max websites. Today, we are talking about hundreds, probably thousands of channels, to connect and sell and embed insurance as part of it. So that is where I think the whole discussion of disruption for me is connectivity. And that's where, these numbers talk about it. 2000, the number of mobile devices have surpassed the human population. And I guess today it's probably 100 times, 200 times. So I don't even know that number. I've lost that count. If you look at a health ecosystem or an auto or a mobility ecosystem, right, everything has huge amount of participants, right? And this is growing. It's not going to stop. These participants will keep on growing. And the pressure on insurance industry keeps on growing to be embedded as part of each and every participant here, right? And that is what we guys are trying to do as part of the tech disruption as well. That is where APIs have gained a transaction. It's kind of become a household name. I saw that the other day, a 4-year-old kid doing and creating an API on a MuleSoft platform. I was like shocked. Right, so that probably is a name which is changing the nature of all innovation. But how does insurance fit into this whole digital ecosystem? That's probably more important. For insurance to understand and to fit into this ecosystem, I think let's understand how the whole super apps, the whole digital platforms or these e-commerce players actually drive, right? So while you see a single screen on the mobile. What goes underneath are APIs. They are reusable assets, right? They're connecting multiple industries, multiple assets into one user experience. And I guess if insurance is to compete into that era, into that space, probably you need something like that. And what the way we see that technology platform or a middle office platform is like a Rubik cube, right? And that is how the technology has to enable insurance companies, right? So if you look at a channel, a product, and a service in a Rubik cube, and if you were to kind of make combinations, you need that flexibility and agility in a tech platform so that you can take any product, put it onto any channel, and give any service. So it can be a quotation service, it can be an endorsement service, it can be a claim service, it could be anything. And this could be multiple, numerous combinations on how you can offer this platform for insurance. That is an era that we are moving into. We've enabled a lot of players, and we are excited to see that a lot of players are already moving into that direction. Finally, middle office is a theme that we've been riding over the last 4 years or so. We are not even near to successful while we've done a lot into the space, but I think middle office is what we strongly believe in. And essentially what we believe is that a core system or a back office system is not going to give you that connectivity to those millions of channels out there. And out of that, probably 90% would be crap. Probably 10% might make sense or give you even a cent of insurance. The fact is you don't want to miss out on them. So you still need a middle office that becomes your connectivity engine to your ecosystem outside those beautiful leaves that you see. And that is what is something that Insure Mo is. I'm not going to talk about it right now. I'm just going to leave the floor open here. Leaving this from a middle office perspective, the next later part of my discussion is all around that. A very quick overview of this periodic table. So our founder is fond of periodic tables, and that's why we structured this whole Insure Mo into this sense. So the blue section is a product, like a product factory. Right? You should have millions of products that you can take up, configure it in a second, and launch it through APIs, right? So these grays are the microservices APIs, probably thousands of microservices APIs that should be available. You should have pre-configured channels like the ones in yellow, right? And we have hundreds of pre-configured channels that you can pick, drop, and launch any of those products into those pre-configured channels. You need a lot of horizontal startups, deep tech capabilities, AI, machine learning, IoT, telematics. So that is what also brings into this whole platform. So that is where I think I want to leave this floor back to Joydeep and probably get the other panelists also involved and invoke their thoughts on that. Joydeep.
Thanks, Rajat. That's very interesting to hear your views and what is really making the whole digital fintech world move along. And the question of API as a fundamental block there is very critical. So as we move on, I mean, all of these technology and disruptions will be nothing if we can't solve the big social problem which insurance is supposed to solve, which is protection for everybody. And India, as we all know, has a large protection gap in excess of 90%, as measured a couple of years back by some reinsurers. That the whole protection gap, which means either you're uninsured or you're underinsured. So I'd like to hand over the floor to Sarveer, who is from Policybazaar. He's the CEO of Policybazaar, and he sees the whole thing from consumer point of view. So, Sarveer, how do you see the protection gap being bridged through technology disruption? And do you see finally a situation where people are going to want to buy insurance finally?
Yeah, thanks, Joydeep. I think as you mentioned, this is a very often quoted number that we are 92% underinsured. So what does this really actually mean, right? And practically what it means is that people, are not, if somebody were not to be there, their family would be 92% shy of what money they would need to live their current lifestyle. So it's important to understand what we are talking about here, which is that your current lifestyle to be maintained if you are not there. So that's really what this protection gap refers to. Now, if we were to take a step back, right, the whole ethos and vision of Policybazaar is to move insurance from being a push product to a pull product, because traditionally insurance has been sold man to man, person to person by agents, and then they explain to people why you should buy. What we are saying is that people should see the need for insurance and they should come to our platform, compare policies, look at policies, be advised by well-trained advisors, and then they should be able to buy a policy. Now, so we've been on this journey. It's been over 12 years that we've been going on this journey. Now, what has changed in the last, I would say, 4 months is that insurance is something that we all would generally agree is good for us. But the problem is that many of us still don't buy it. And the reason for that is very simple. You pay upfront for a policy and you will get some return later on in your life, especially when you may not be there. So it's very hard to, get over this point, and that's why it has remained a push product. And what has been seen is that things change when big incidents happen. So if one of your friends, let's say, goes to hospital and ends up paying a 5 lakh rupee bill, you can bet that many of that person's friends will now buy health insurance. And COVID, in that sense, is the mother of all incidents. So what has happened is that suddenly all of us have woken up that death, disease, disability are not as far away from us as we originally thought. So, which is really the reason why people are looking for insurance, and why, what it said, that it's a pull product versus a push product. Now, what are we seeing, right? If we look at our platform, what are we seeing? What we are seeing is that our number of inquiries on our platform has gone up tremendously. So, like literally month over month, they're going up between 40 and 60%. The second thing that we are seeing is that people are talking a lot more to the advisors. Traditionally, the sort of legend is that the advisor is chasing the consumer. But now, in some cases, many times the consumer is, really wanting to talk to the advisor. So our talk time has gone up. And finally, what we are seeing is that people are buying a lot more policies than they used to buy. So this is a journey. I think, nothing moves from push to pull in span of months. But what COVID has acted on, maybe much like Y2K or something, has given it a bump up where people have suddenly realized that this is extremely important. And, we are seeing the benefits of that.
Thanks, Avi. That was really a very good insight into what's really happening, because you are probably in the nerve center of it all as the most visited site. It seems that one of the keys to working on this, succeeding in these times and beyond, is being digital. Now, there's a lot of talk of online and digital. So I'd like to ask Sachin, Sachin Goyal, who's the CTO of Tata AI Life, a company which is completing 20 years. Is that, Sachin, what do you think is required to be geared up for being online and being digital, and what is the difference between the two? People talk of it interchangeably nowadays. Can you elaborate a bit on this?
Thank you, Joydeep. And first of all, thank you to the organizers for having me here. A very good point, Joydeep, that has come up so far, the significant protection gap that we see in the country today. And at Tata AIA, we're quite focused on that. We continue to watch it closely. We're quite focused on addressing this gap by hugely simplifying the entire process using digital. Now, as you alluded to, digital is a little different from online in the sense that it is automation plus some more. So in the context of insurance, it's about the product, the process, the policies, and the ecosystem. To give you an example, we leverage digital to create real-time integrations with our channel partners and providers such that entire journey is simplified. The customer has to furnish fewer pieces of information and documents. Similarly, fixing of medical appointments happens in real time. In quite a few cases, those are substituted with telemedicals. Rajat did talk about the APIs, so the entire API economy that we often hear about in different forums. That's becoming quite real. When you leverage APIs to integrate multiple organizations, bringing a service together to make it easier for the consumer. And that's what we've managed to do. Now protection is a business where you're underwriting fairly large risk, and which is why you would need to be quite prudent. But at the same time, you can still simplify the process for the customer. Quite like a food delivery platform, you'll find the entire process highly simplified, completely transparent to ensure delightful customer experience. Now, let me give you another example. Some customers might find insurance as a little more complicated process. Now, to ensure there's enough transparency, the digital platforms provide enough information for the customer to familiarize himself. In addition, at Tata AIA, we have a video PSC process where a video is also recorded along with the customer to make sure the customers really understood the product that's being purchased. So just to bring it back together, digital and online, while you could do simple automation, but when you bring the entire organization together, which means the process, the product, and the entire ecosystem together to create a platform which helps the customer get information on fingertips, look at the end-to-end experience that the customer gets. That's really what digital is, and that is where we've been seeing a lot of value coming out of our investments in digital.
Thank you, Sachin. So digital and online stands deciphered to an extent, but as people keep on talking about them in the same breath. And thanks for uh, talking about the differences, how it's really plays a part as companies gear up for a post-COVID world too. So let me ask you one more question here, Sachin, because you have been implementing digital initiatives. You deal with a whole lot of agents, you deal with bank insurance partners, and at the same time, you also have a lot of digital assets of your own, and you want people to align to a digital process. How easy or difficult it is to convince people to use digital methods vis-a-vis either merely online or bordering on offline processes while selling and or servicing?
Great question, Joydeep. And I must say, there is a pre-COVID era and a post-COVID era. While COVID brought so many challenges, it has a silver lining also for digital. Now, if you see, there is a natural pull for digital. You'll see everyone, starting from the youngest in the family to the oldest, becoming really comfortable with digital. For a long time, we'd heard various challenges in digital adoption, the most prominent one being lack of technology infrastructure and connectivity across the country. But I think people have now discovered the ubiquity of broadband and high-speed mobile networks. So I think the challenges are well addressed, and everyone in the country has really understood it's here and how beneficial it is. If I bring it closer to business, we've been quite fortunate to have our digital platforms ready and already in use in various channels when COVID came in. But as it came in, distributors who were thus far not on digital were very quick to adopt the digital platforms, whether it is for digital prospecting or for customer servicing needs, etc. So basically, what has happened is the simplicity that these platforms have brought in, how these have enabled distributors to sell more, to address the customer needs more appropriately, is what has created this pull. If I can use another very relevant example here, we see a very high level of engagement with the customers, and when I look at the buying process, I think a key reason for that would be the sales process is focused on addressing the customer needs more than the product itself. So in our process, there is a suitability analysis that is conducted when the customer is buying the policy to ensure the selected product suits the customer needs. Now, that's something that the distributors like, as well as the customer loves it as well, because digital is actually helping you enhance customer engagement and helping you address the customer needs in the appropriate manner. So really, if you see adoption, that has gone up multifold, clearly on the back of the benefits that it is offering to both distributors and customers. Now, when it comes to servicing side, the variety of touch points that digital has now offered for servicing the customer, that has created a very natural pull. Now, a lot of customer servicing now is happening on WhatsApp platform for us. That's so convenient for the customer. We've all used these platforms in our normal life, and we now see these things working seamlessly and so effortlessly in a corporate environment. So I think once again, even on the customer servicing side, digital has really proven the value that it brings in.
Thank you, Sachin. And therefore, the twin worries that anybody who is deploying technology or any kind of digital tools, which are adoption engagement, are coming up and will keep coming up, and we have to keep conquering them. So before moving to the to survey on customer engagement, I have a question from the audience, and this is a nice question. The question has come from somebody who's anonymous at this point of time. This is, what are the new cutting edge technologies that are disrupting the insurance industry? So if I may quickly bring in Rajat here, and Sarveet, then I will move to you and we'll continue on the customer engagement. But very quickly, Rajat, what are the new and really new stuff that you're seeing in the COVID times?
The deep tech is obviously there, and that's what the whole ecosystem play comes for us. We've created a marketplace, artificial intelligence, machine learning, IoT, telematics, right? These were all happening in silos. And what we believe, and I think we are all hearing that the amount of innovation which has happened in the last 3 months has not even happened in the last 3 years, right? So we've seen real use cases of artificial intelligence, not fake use cases, real use cases which are actually delivering value to the customer. Telematics has grown big time, smart cars or smart health is actually coming to fore. So I believe all of that stuff is getting embedded as part of insurance somewhere or the other. And I'm sure, Sachin and Sarbir, they're all would be seeing some of these aspects somewhere into their daily lives as well.
Right. So to Savi, then it's a segue to you. Combining both where Sachin left off and what Rajat said. How do you see these technologies, which are really disruptive ones, creating consumer engagement in a category which never, caught the fancy of anybody? It was the last thing that people want to buy or wanted to buy. How do we engage customers using these newer technologies in the future?
Yeah. So Joydeep, I have a view on this that, while the technology finally has to be the servant of man, right? It's not the other way around. And I think what we really mean by having artificial intelligence, deep tech, whichever, word you want to use, what we are really trying to move towards is personalization at a mass scale. If you see the way things have worked out, earlier it was not possible to personalize at a mass scale. And we were all taught in our marketing books and Kotler and stuff like that you have to segment customers, and there are these buckets of people and things like that. Now what these technologies are allowing us to do is to actually get rid of all that and say that I can actually simply fully understand what Mr. Joydeep Roy is all about, what is his context, why is he here, what should be the best product for him. So at Policybazaar, what we are trying to do is that we have all this data and all these technologies with us, but what we are trying to move towards is what is the consumer there for, and to design relevant consumer, insights and campaigns or discussions with them actually. In fact, I think the use of the old marketing terminology like campaign and all is actually wrong, because I think the what we really want to have is a discussion with them. So now the traditional answer to your question would be to go into things like we will do a webinar, and we will do this, and we will send you a drip campaign, and all those various things which are well understood, and we are doing all of that. So I think I'm the first to admit that we have not reached the 22nd century yet. We are doing all of that also, but what we are trying to move towards is to understand your context and to say that, look, you have bought this policy from us, we see that you have 2 children, maybe you just added that your wife, and you got married on so and so date. Now is the right time for you to consider a term policy. And here is why you should buy a term policy. Not because we want to sell it to you and make a commission, but because if you have a family and if you are not there, you need to make sure that your family is taken care of. So I think the discussion in this whole using these technologies and these tools is to take the discussion to a point which is consumer first rather than platform first and insurer first, and say, look, these are the kind of things that we can sense that you have, and please sort of consider these products. So those are the kind of work that we are doing, and that is the kind of, I think, is the future of where this industry is also headed.
Thanks, Arveer. And it is quite, I'd say, ideal that you refer to technology as the slave of man, because the fear forever, right from when science fiction has been written, there have been some repetitive thoughts, themes which have kept coming, and one was that are robots overturning humans and coming and killing everybody. Be it old prehistoric beasts and coming. We are always lying in fear of extinction. So I guess that's a very comforting thought that you've put, that finally we have to use technology and not let technology be led by technology, right? Uh, yeah, and it is very nice, because a question has come up from Aman Gupta, and I'll pose this question not to you first, but to Sachin first. Then it's exactly in the line of that, but the real opposite. Will robo advisory play a vital role in insurtech in the future? Sachin, what do you feel?
I think certainly, Jaideep, it certainly will play a role as we progress. Some of these technologies which are at the nascent stages, there is some bit of evolution needed for them to be suited for commercial use, for enterprise use. But like you mentioned, I think that the things that we have to watch out for is a lot being talked about artificial intelligence, etc. And by the way, we use a lot of that in our organization already. What one needs to look at is they should not start building in biases into the model, because some of these autonomous systems, that's one thing that we all need to watch out for. So long as we do that, robo advisory is definitely the way to go. It gives you the ability to standardize what's happening on the field for you, and more importantly, we talked about hyper personalization. You can actually identify needs of a certain category and at a very small category level of the customers, and then advise them on that particular need and identify the right offering. And it could be a combination of offerings for the customer. So yeah, my view is definitely it's the way to go.
So there's been a very lovely question which has come from Vaibhav Vyas. And that question I'll pose to you, Sir Veer, because that will be a perfect segue back to Rajat, because the question is for APIs. It's about APIs. It says the Vaibhav Vyas is asking, is it really difficult for brokers? So he actually stating it is really difficult for brokers to collaborate with insurance companies for their APIs. And how do you think it is going to change? So what do you think, Safir? Is it being difficult for you to have APIs with insurers? Before we go back to Rajat on the real thing about APIs, yeah.
I think, Joydeep, the question can be looked at various levels. But if I were to be very practical about what Weber is asking, it is difficult if you are starting out this journey. And I think we have. I would dare say that we have developed a lot of expertise around how to work with insurers, because insurers is not a common. I mean, it's not like one thing, right? Different insurers are at different levels of technology adoption. Some have in-house teams, some use external teams. So it makes a difference based on that. So I think the what I would suggest to Weber is that it's a journey, and initially it does seem intimidating, and initially there are a lot of roadblocks in terms of saying we can't do this and we can't do that. But eventually, see, the reality is insurers and intermediaries are both in the service of the consumer. And if we can, as long as the business volume is there, as long as we have have a reason to exist. See, intermediaries must have a reason to exist, and if you have a reason to exist, then eventually the insurers will work with you. So I would suggest that he kind of work through the teething challenges, because it's worth it. Because when you get to the other side, like we have, then your consumers get a fantastic experience. They are able to see where they stand with respect to the insurer, with respect to service, with respect to claims, and then that will hopefully give Weber also more business, assuming he's a broker.
Yeah, excellent. So great. So now that we've established that while getting APIs might be difficult, but get them, we have to, right? And we'll get them working. Rajat, back to you. And time permitting, we'll take one more audience question at the end. So Rajat, back to you. And what do you think are the pillars on which this entire thing of accelerations can happen? Or what technological pillars or what philosophical pillars we should base our technology disruptions on?
Sure.
Slide is on the first slide still, yeah? On the
Sure. So Joydeep, Sarbir, and Vaibhav. So the answer lies that yes. For me, we believe that yes. I mean, there are a lot of startups. Funding is a problem. Cash flow is a problem for startups, and creating tech is not easy, right? And many insurers probably are not there to offer these APIs because they don't even know the relevance of these small brokers and startups. So that is where we guys come into picture, and just take a minute to come to that stage and make you understand how we are doing this for brokers, small brokers and startups as well. But let me give you a context of who we are and how we've changed as an organization in the last 3-4 years. So we started in 2000. We were one of the first ones to come out with a Java browser-based core insurance systems in 2000, when insurers were working on AS400 based systems. I think some of them are still, but we were 20 years back. We were the first ones to say that yes, we can do a browser-based Java based system. Since then, we've grown massively. 200 plus insurers customers we have globally. We're present in around 30 plus countries. Around 1,800 employees. Software business, we have around 150 plus customers in the last 20 years. Cloud business, which was started almost 3.5-4 years back, we've already crossed around 150. So you can see the amount of speed and velocity how we've grown. We're present in all life, general, and health business lines. So insurance is what we live and breathe. We don't understand anything else. cloud for us is a layer of PaaS, InsureMo. Middle office is effectively a platform as a service model where we have a product factory which has pre-configured products, more than 3,000 plus pre-configured products, a lot of SKUs that can be done on those product factories. We have our own service management platform. There's own eBOW microservices and APIs, which effectively can be used by brokers and startups to create their own customer journeys. We also bring a lot of third-party APIs, payments, machine learning, IoT, etc. as well. Then we have our own SaaS applications, broker applications, intermediary portals, claim portals, a digital core as well, which can be powered by these APIs, right? And then third-party applications as well get powered by a lot of these APIs. We power a lot of ecosystem as well, auto dealer, brokers, health ecosystems, and a lot of other insurance applications as well. In terms of how this is structured and how InsureMo is powering this talks about it all. So InsureMo, which is a middleware, middle office platform, is powering all these players somewhere or the other. So we obviously work with carriers. That's a bread and butter. So we work with almost 100 plus carriers. And you can imagine a use case of a 2 weeks go live with which is one channel and one product, right to powering a $6.5 billion organization, which is running all their premiums on this platform, building a digital core. So anything in between that is something that we're powering insurers to build their use cases and platforms on. We're completely partner driven. We work with a lot of partners to deliver the end applications. Cloud for us, channels is a very big play. So we work with e-commerce, wallets, banks, any kinds of health wellness companies. So anything that you see from a channels perspective, we either work with them as customers or we connect with them as channels. Startups, I think this addresses question of Weber. We work with a lot of startups. We offer this platform for free. And when I say we offer this platform for free, means there are APIs, there are products. And startups which are probably into their seed stage, they have not come to a Series A, they would generally take these APIs and build their apps and their user journeys and go live. And we tie down our success to the success of them. So it's completely outcome and fee-based to the success fee that they do. So that is how we're powering a lot of startups to go out there and create those insurtechs for the ecosystem. We work with a lot of software vendors as well, a lot of CRM companies, a lot of ex-eBOW competitors as well, where we're powering them to come to the next stage of their user applications as well. Then obviously ecosystems on the auto mobility, health, and the broker agent side is something that we are already doing. Finally, last slide for me, that is what we are powering, 3 V's of InsureMo. And these 3 V's are real 3 V's, what we are doing for the insurance industry. All real live numbers. So velocity, variation, and volumes. That is what we live and breathe on. And that is what we power our customers with. When we say velocity, we are talking of launching a channel in a single day. You don't have to wait for multiple rounds of integration, society, UAT, spends millions of dollars to connect to a channel. You do it in a day's time, right? Launch a new product in less than a week's time. Most complex product, probably a week and a half. That's what we aim at. All these products are already available. You create your SKUs, get your APIs, and off you go. A real life case is in India itself, a large MNC life insurer, which is working on a 2-speed model with a legacy core back office, which have taken InsureMo on a 2-speed model on top of the legacy core to drive this velocity. And they've already launched multiple channels and multiple products just in a matter of 3 to 4 months. Variation. I've already mentioned 3,000 plus products. That itself covers probably anything in the world. I have not seen any product which is not there in this product factory or product library. On every product, there are multiple SKUs as well. So you take a master product and you create any kind of a marketable product as well. So this is what we call as SKUs. It's one of the largest e-commerce company in India. They're already using this to drive that variation as well as velocity on the platform, both for life, general, and health as well. Volumes, we are already issuing around 50K average policy volume count. So 50,000 policies are getting issued on this platform on a daily basis and average. And if I look at a peak hit that we've hit to show you the elasticity of this platform, we've done around 65 million policies in 24 hours. That talks of the velocity of what this platform can do for a small startup, which is just emerging, that to a $6.5 billion general insurer, which is trying to issue that kind of volumes. So that is where insurance is moving, and they've already there. Some players started the journey almost 3 years back, and some have actually realized this after COVID happening. So for us, we see huge amount of innovation, and that's what we guys are living and doing in the insurance space. Thanks.
Very impressive, Rajat. And I think these could be quite the mantras of technology disruption as we move ahead, because we have to base it on certain, definitely on certain pillars. And velocity, variation, variance or variation, and volume seem to be worthy causes. And that, thank you for that. So we have just a couple of questions before we wrap up. So there's an interesting question. How do you see micro and nano insurance products coming up in the next 5 to 10 odd years? Does the industry have enough data for rolling out products in the space? It's a question from Janak Satra. Very interesting in especially with your espousement of the volume as you just spoke of, or you spoke of massive volumes in a single day. So maybe you can take this question and answer very quickly. How do you see nano insurance and micro insurance in the coming years?
It's very real, and I think that the volume game is all about long tail, bite-sized sachet products, and it's no longer it's in Asia. Yes, I'm not talking of US and Europe markets right now. I'm talking of Asian context, especially when traditional products like life and auto, motor insurance products or travel insurance products have taken a hit. So that is where these bite-sized sachet products, which are more contextual in nature, and that's again I'm picking on a point of Sachin, is the theme. And I think that is where the 65 million policies come from as well.
So thank you very much. Thanks, Rajat. And last question. We are having some good questions coming up right at the very end. I wish there at the beginning there were more time that time. But this is a worthy question with no direct answer. So maybe I'll take it, which is how to boost insurance penetration in India, which currently is in single-digit percentage. Is a question from Rajat Jain. So Rajat, I think you have to look at it this way. Our penetration is measured currently as a percentage of premium as a percentage of GDP, which is a maybe okay measure for life insurance, but nowhere a good measure for general insurance. Because general insurance is the amount of some insured growth has to be seen, and how much of the GDP you are protecting rather than how much premium you're charging. Because as you keep growing your base, your premiums keep falling because of the universality of that and the rooting out of anti-selection. So, however, I mean, as an acceptable measure, if you take the premium also, it is 3.2%, not bad, but it needs to go to somewhere near the world average of 6.5%. If that has to happen, there has to be measures rolled out from government, measures from regulator, measures from companies themselves. And maybe in that order, the government can take care of tax incentives, government take care of rolling out mandatory stuff like the Ayushman Bharat, right? Other similar such stuff, like maybe homes above 250 square feet can be asked to be all mandatorily insured. All the motor cars which are not insured in the country today can be, it can be enforced, so on and so forth. From the regulator side, distribution reforms, opening up of further distribution channels, and a bit of relaxation of controls, which can happen as risk-based, capital and risk-based supervision comes on in the next couple of years. I think that's important. And finally, from the company's side, is investment in the penetration areas, which means getting out of the top 20 cities and moving further down. The trouble today is the cost of acquisition, and so therefore that has to be conquered by the company. So these are the ways typically a direction will go. And be careful of what you wish for, because too much of insurance is also not good for an economy which is not ready for it. Imagine your plumber coming and asking and doubling his charge to just change a tap just because he has professional indemnity cover. It's going to be difficult. So affordability of all products and services
like these to fine tune and say who are the customers where you need to really look at extending credit, withdrawing credit, restraining it. And I think all of this has to come through various data, machine learning algos, access to real-time info. So there's no way I think one can even think of staying where one is. One has to move forward. There is a lot more, and I think in my mind, businesses built and fine-tuned at this time will have a great learning and insight.
Absolutely.
Different customer and industry segments and the data points to have a far robust credit model going forward.
Absolutely. I can't agree more with you, Deepak. I think all the people, and because maybe I have been in the risk space myself, I think you are really seeing the quality of the work you've done. And, are the people who you think are high quality or high rated, are they indeed high quality or high rated under such an extreme stress? And if they are not, how are people recovering from the stress? Who are the people recovering the first? Who are the people who are going to recover later? What are some of those nuances, I think, are going to be very invaluable, not just from a credit perspective, economically, in variety of ways. I think, this is going to be fascinating data and information. We don't need to do any more stress testing because the universe itself is stress testing us today. So I don't think we need to further add any further stress over and above a situation where the economy goes maybe shut for 2 months and then 50% open for the next 2 months. So I think that's but I also feel, as you rightly said, this is an opportunity, as Mayuresh pointed out, a great opportunity to create infrastructure to pick up even more information, so that even when you look at people who are recovering, how they are going to perform is something that becomes very valuable for us to track. So I'm going to kind of get on to the question and answer session now. We're getting lots of interesting questions, and I'm going to kind of throw the questions open. I mean, questions are there for a variety of people. I think one of the very interesting questions which I thought I wanted to ask, but obviously there was no time. What do you think could be the barriers that could cause banks to delay or sidetrack digitization efforts in the new world? And I think this is something which is very important. So, for example, if I look at all the large incumbent FIPs, if I may use that word, the information scarcity is for the banks and for the financial service entities which don't have large established base of customers. But for the banks which have very significant, large, dominant market share, relatively speaking, something like an AA, the NBFC AA system is actually stuff where a lot of their information is sort of, in a way, in some part moving to others. So how do we see this whole situation where, do you see a situation where maybe banks will voluntarily come in and, the FIPs will come in to do this sort of, new wave of digitization? Or are we going to really look at regulation coming in and saying this is something that has to be done? Maybe Deepak, I'll go with you, and then maybe I can go to Mayuresh and Sanjay and others.
No, so I think I'll continue with where I left. I'm saying it's not optional any which way.
Yeah.
Do you have a choice? Answer is no.
Right.
Just don't have a choice. I mean, this is table stakes. If institutions have to manage their risk capital better, if they have to manage overall, the growth of franchisee, the cost of acquisition, the cost of service, the whole business model. And this is one area where, as we all famously say, that the capital that institution is putting is just 10%, 90% is all the risk. You only make money when you get your last installment or the last two installments from customer.
Right.
So I think one is taking disproportionate risk for the return that one gets, and especially if you make poor credit decision. It's going to haunt. Organizations have not lost world over by poor customer service, unfortunately, in financial service. Organizations, the financial institutions have just gone belly up because they couldn't manage their risk better. Largely around the credit. So I don't think anyone, irrespective of where financial institutions are in their journey, they are all going to imbibe, they are going to adopt this like never before, probably with a lot more urgency and sense of purpose than what we probably saw earlier.
Sure. Mayuresh, your thoughts on this? My memories are just jogged by the way the credit bureau structure came up, because finally, I think the regulator had to come down, and if I'm not wrong, and that's just my memory serves me right, they had to sort of tell the banking system that you have to be able to give this data. So I'm just wondering whether we are going to have a more enlightened financial services system at that point, or are we going to kind of go through a few more torturous years of trying to get onto the to the bandwagon as it were? Maybe Mayuresh, I'll pass that question to you.
Yeah. So as I mentioned in my last comment, I think the need to sort of change and embrace digitization has become more prominent in these times. Because that's the only way one can try and stay relevant in today's times. And one of the biggest risks, as Deepak mentioned, that this situation has put us in for all lenders and banks, how your credit cost or loan losses are actually going to play out, and how you manage customers and work with them to tide over it will require them to open up and have access and give access to data.
Great, Mayuresh, thank you. I think we are running quite late. It looks like we've been going ahead of time with what I'm given to understand. So before I allow the moderator to comment, I just wanted to thank everyone. I think this was a fantastic discussion, some great points. From what you told me, I think clearly more data and a data-rich society which enables a far greater inclusion is the way of the future. Yes, there could be some short-term interim challenges, but I do believe that this is the way to go. It's clearly the mandate, and this is the view that came in from the audience. Thank you all, and over to you, moderator.
Thank you, everyone. Thank you, all of you panelists, for making time and coming to this session. I'd also like to thank our valued partners, CrediWatch, eBiotech, UKFCO, SBI Mutual Fund, Bank of India, and iDesign. We'll be taking a short break and we'll be back later. Thank you, everyone.
Thank you.
Thank you.